Happy New Year to you and yours. I wish you all the best. As we start 2025, we want to have a very clear direction of where we're going to be investing our money throughout the year. To do that, we need to take into account the new US administration, the new local leadership. In my case, that means yet another prime minister on the horizon. Also, inflation, interest rate, exchange rate. So we are optimized to face whatever is coming our way. And if, like me, you have a family to take care, or if you are living in a country that's really dependent on whatever the US is doing, this video is for you. I will be sharing my 2025 investing plan, and I hope this will give you some ideas and some direction for your own investing plan. But first, we need to recap a little bit what happened in 2024. And that was a crazy year for investors, wasn't it? If we look at the S&P 500, it went up 23%. Nasdaq went up 29%. Historically, they give you 7 to 9% return. So that was really good. And even Japan, the topics went bonkers at 17%. And the Nikkei 225 went up 19%. That's really high for Japan. If we're looking at the PE ratio, or price earning ratio in the US, in December, it was 27.8, when it's usually 15 to 20. And even in Japan, it finished the year at 20. We haven't seen that since 2022. And that's not all. All the major cryptos went to the moon, as you probably already know. And even real estate in Japan continued going up, finally, and also in the US for different reasons. And even gold went up by 26%. Needless to say, it was very difficult to be done as an investor last year. My plan going into 2024 was simple. First, contribute to my investment account to the maximum, the iDeCo, which is for you would be the 401k if you're watching from the US, and my NISA, equivalent to the IRA or Roth IRA. Not buying any individual stock, but going for broad-based indexes through mutual funds and ETF to diversify and also avoid being overexposed to tech as much as possible given my current holding. If you've been following this channel for some time, you know that I've been working in tech for close to 15 years and I've had enough exposure through stock compensation. By the way, if you want to know more about stock compensation, how it works, the good, the bad, and the ugly, please let me know in the comments down below and I will make a video about it. I have a lot to say. The second one was to put cash on the side for extra security. We never know. And because the interest rate on savings accounts in Japanese yen are really low, I put most of my money in US dollars for 6 to 9 months term deposit. And that was part also for me of my third point of keeping some powder dry in case I find an interesting rental property to add to my portfolio. And finally, I wanted to pick up on crypto to hedge my holdings, right? Which worked out really well, especially at the end of the year with the upcoming administration stance on crypto. Everything went up. So looking at myself from an objective standpoint, what has happened in the past year? As I'm approaching my 50s, I'm still too invested in the stock market, whether it's individual stocks or through broad-based indexes. And I need to balance my holdings a little bit more, even if I'm still 15 to 20 years away from retirement. And the reason for me to think that is what I mentioned about the P ratio in the US and the 2-year fantastic bull run we had on the US stock market that could potentially call for a correction. Even Warren Buffett has been holding cash and loads of it. He may know something we don't, or he's being extra cautious. Either way, it might be a good timing to hold on more cash and diversify our holdings. But that depends on a lot of factors from the US and Japan. That's why I want to share with you what I think might impact investors this year so that you can position yourself based on your risk appetite and make your own investment decisions. First thing first, tariffs are supposed to go up versus Mexico, Canada for 25% and China 10% if they don't play ball with the US. It ends up doing potentially 3 things. The first one is making foreign goods more expensive than domestic ones, obviously, and therefore making domestic goods more competitive. Politically speaking, it sounds like a great idea. That would also possibly do a second thing, is showing up public finances because the tariff go into the state coffer, maybe reducing the deficit, maybe. And the third one, maybe, and probably the most likely, it's a negotiation tactic so that the countries targeted, Canada, Mexico, China, will fall in line with US policies and be ready to negotiate. You'll notice that Japan is not talked about too much, which is a very good thing for me and everybody sitting in Japan. The truth is, a lot of Japanese companies are actually already manufacturing in the US, so they wouldn't be harmed by any tariffs because everything they produce is actually US made. And that dates back to the 1990s when there was a trade war between the two countries and a lot of discussion happened and a lot of the actual production moved to the US, especially for cars. And the US and the Japanese government negotiate really well and actually see eye to eye. Or to be very honest, I should say the Japanese government is really ready to bang over backward to please the US because they really need all the support from the US they can get, especially in this day and age with all the geopolitical tensions in Eastern Asia. The new administration wants to lower interest rate and also reduce inflation. This is a difficult one for a few reasons. Reducing interest rate will help companies borrow to expand, sustain real estate, and ease the life of many consumers and make the US dollars less expensive versus other currencies, making US goods more competitive on the international market. On the flip side, it could potentially keep inflation high because to reduce inflation, the theory goes, usually one needs higher interest rate. So which way will it go? Remains to be seen, especially with a very independent Fed, with Chairman Powell term finishes in May 2026. From a Japanese standpoint, lower rates would reduce the difference between US dollars and Japanese yen, propping up the Japanese yen, lowering the US dollars, making imports less expensive, especially energy, and that would help us fight inflation a lot. But at the same time, it would make Japanese exports a little bit more expensive, so less competitive. So not easy, right? Japan will likely not move on its own on interest rate because it has very little margin of movement. There were actually 2 rate hikes last year. The first one was really good. It stopped the negative rate era. That was really good for the economy. And there was a second one trying to prop up the Japanese yen against the dollar. It worked for a very little time, but it was overall positive for the economy. Now, the reason why the BOJ and the government probably won't move are a few. The first one, they're going to wait and see to look at what the US will actually be doing and they will react to that. The other one is to avoid putting pressure on the Japanese consumers by increasing the rates because it would reduce the consumption, and domestic consumption in Japan represents more than half of the GDP. So they don't want to hurt the economy. And there's actually another one, secret that's behind that, is that the rates obviously would affect the mortgage repayment, right? And in Japan, 68% of the mortgages are actually variable mortgages. So if they increase the rate, immediately it affects the households. They have less money to spend. They reduce what they can spend and they touch the economy. And there is a possible general election coming this year again. It's in the works, so nobody wants to shake the boat. So probably from a Japan standpoint, nothing is going to happen in 2025 except if the US makes the first move. The new president wants to reduce corporate tax for companies producing goods domestically down to a very low of 15%. Personal taxes, capital gain tax also should be lower. And there are also talks to eliminate capital gain tax on US-based tokens like Solana, Cardano, and Constellation. That would be just crazy for the crypto market that's already on steroids. From the Japanese standpoint, there has not been any talks about changing any tax except maybe a little bit on crypto tax, but more on that later. So many changes and road bumps on the horizon. But what does it mean for us, investors, in 2025? Just before we go there, it would be super useful if you could click the like button and subscribe if you have enjoyed this video so far. Thank you so much for the help. I continue staying away from individual stocks and continue with broad-based indexes to continue diversifying and smooth out any potential correction, especially with the tech sector. I may actually sell some of my individual stock to divert the cash toward the index, ETFs, and mutual funds. Probably those I showed you before with some minor adjustments. I look at some ETFs and mutual funds focusing on dividends because the company they hold tend to be staple industries that would benefit from a redirection of the market away from tech. And I also keep some cash in my portfolio just in case, but I'll talk about this shortly. Now, depending on your age and your risk tolerance, you may want to balance your portfolio, whether it's a 2-fund portfolio, 3-fund portfolio, or the awesome portfolio, or any variation of it. I leave some videos down below and some resources for you to dig deeper, as well as the Vanguard questionnaire to help you decide your asset allocation and give you some ideas. Remember, nevertheless, to think long-term and remain invested in the market through thick and thin, especially thin. That's essential to build wealth and generate above average return. Cryptocurrencies are a great age to increase the return of any portfolio. At least that's been the case in the past few years, although they are super volatile. And I personally intend to continue investing in them this year, mainly ETH, XRP, Sol, Cardano, to a maximum of 5% of my overall portfolio. But only at one condition: that the Bank of Japan continues toward its recommendation to put cryptos under the investment law rather than the payment law. You see, up until now, they were considered payment and they were under the payment law, which means that any gain was taxed as a regular income, which means up to 55% tax rate, including local tax. If it goes under the investment law, the maximum capital gains becomes 20.3%, much better. This could happen as early as April. So until then, I'll probably stay still, or I just buy and not take any profit, which might be a bit tough with a volatile asset. So I'm still thinking that one through. I want to keep some money on the side just in case, right? So during this quarter, I'll be selling positions and increase my cash holdings to 15%, maybe 20% of my overall investment portfolio. Of course, that's beside my emergency fund, which is the 3 to 6 months of living expense that's put on the side in case you were to lose your main source of income. And for me, it's more like 9 months because I have a family and I'm super cautious, so it's up to you. As you already know, if you follow this channel regularly, I have been trying to increase my rental property portfolio for some time, but I could not find anything that made economic sense, especially with the prices going up a lot in Japan. Appreciation, foreign buyers, increase in interest rate. It's not super easy, but I'll keep looking this year as well, and I will keep you informed as soon as I find something, because I'm really keen on going forward with that. This is my investing plan for 2025. Please let me know in the comment down below if that was interesting, or if you have any other idea to suggest. I will read and answer every single comment. Please do not hesitate to like and subscribe if you haven't done it already, or to check these videos to go further. Thank you again for watching. Until next time, goodbye.